Hello everybody, I hope you're all doing well. It's Lane here with MetaShackle. Today we're going to be taking another look at the XRP Dragon Pattern, as well as the Elliott Wave count that we've been talking about for quite some time. We've seen quite a shift as the price moved up into the D wave, down into the E, which did sweep the C wave just as I'd originally anticipated, and price is now starting to move to the upside. There's a couple potential different options here, and we'll go over them. So let's not waste any more time and let's get into the chart. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. So what we're looking at here is the XRP daily chart, and if you haven't seen my previous videos, what we have here is two patterns laying over top of each other. So we have a dragon pattern with the head here coming down to the front feet, to the hump, to the rear feet, moving up to the tail. Now laid over top of this dragon pattern, we also have a 5-wave Elliott wave move to the upside that you can see right here. With the wave 1, the wave 2, the wave 3, the wave 4 termination, which is now in, moving up to the wave 5. Now for about the last week to maybe 10 days or so, I have been kind of holding off on this pattern, just keeping my eye on it to see how it would turn out, because a lot of times as a chartist and as a trader, we tend to try and build our bias into the chart. So if we're bullish and we want to see the price rise, especially in regard to Elliott Wave, when we're applying the waves to the pattern, a lot of times we will try to apply them in a way that fits our bias rather than reading the chart for what it is. So after the price broke out of the original trend line, which I had coming down a little bit lower than the one that you can see on the chart now, breaking to the upside, giving us this retest and then a fake out before breaking back down into the pattern, it looked as if the Elliott Wave triangle pattern had perhaps failed. We now know that the price actually formed a D wave here, and I moved the upper trend line up to this D wave termination being the second point between the B and the D, with price coming back down on this flash crash that we saw over the weekend, which essentially finished out the E wave. And now we're starting to see price move to the upside. So there was a chance here that this extended C leg right here, being a 5-wave move to the downside, may have only completed the 4th wave. So I was watching for this potentially to be the wave 4 termination here coming down for a 5th wave, but it does appear that this is complete and it's now moving to the upside, which means that the wave 4 termination is in, and we are now starting to move into the primary 5th wave to the upside to complete this 5-wave Elliott wave impulse. So at this point, it's very likely that what we're actually doing now is forming the wave 1 of this primary 5th wave. So essentially what we could be seeing here would be something like this. That's just a rough sketch, by the way, nothing precise, just to give you an idea. Now, as I've talked about previously, I think there's a few options for this primary 5th wave that could occur. We could fall short, coming somewhere in the area of this weak doji waterfall right here with a truncated 5th, not taking out the previous high, which right now is the all-time high. We could sweep this high, completing the pattern. Or there is also the possibility that we could move up to the 1.618, which is currently resting up in this area based on the information that we have on this ABCDE descending wedge triangle, which could take price up to the 1.618, which is currently resting at about $5.45, and these numbers will vary depending on which chart you're using, which exchange is providing this chart, and how you apply the fib levels to your chart. But it could also come up here as high as the 1.786, which is resting at about $6.08. For the time being, I'm going to keep it down here near this weak doji. But there is also a second count on this chart that is valid as well, which if we remove the ABCDE triangle, a WXY also fits this pattern, with this ABC that we have right here actually being the W. This correction to the upside, which is a three-wave move, would be your X wave connector. And this ABC with the extended C coming to the downside would actually be your Y wave. But it doesn't make any difference at whether or not this is a WXY or whether or not this is an Elliott Wave triangle pattern, because the result is ultimately the same with what we're seeing here, which is bullish, because these patterns lead to and set up the fifth wave. But I do believe that the most accurate way to label this is going to be the ABCDE descending triangle. So essentially what I'm going to be watching for here is to see where this wave 1 termination is. Because if I'm going to trade this, I'm going to enter after the wave 2 has formed and started to move upwards. And by dropping down to the 15-minute chart now, you can see that this was the flash crash we had over the weekend. The wave 1 termination line is right here and has still not been broken, so the pattern is still valid. The only thing that could invalidate this pattern is if this wave 1 termination was broken. And it did get very close. There's a very tight margin here, but that's often the case between the fourth wave termination and the wave 1 termination. But this was very hard to get a decent count on. So I've basically just been sitting back, watching, letting it play out. Because there's a chance that this could have been the wave 3 termination moving up to here, which could have been the wave 4 coming down for a wave 5. But it looks like to me what we're actually looking at here now is this being the wave 1 down to the wave 2, which would be moving up into the other waves in the pattern, forming the primary fifth. But in this being a wave 3, it is also a 5-wave move. So we can expect to see a 5-wave move within this wave itself. So what I'm looking for is this wave 1 termination to come back down for the wave 2 of this third wave in this subwave of the primary fifth. And if that is correct, and this is the wave 1 termination coming down into the wave 2 here, then what we would be looking for is the fib levels. We still don't know where this termination point is, to retrace down to this wave 2 termination, which oftentimes will retrace to the 0.5 fib, the 0.618, even as low as the 0.764. So just like I was saying, if this is the primary subwave moving up here into what would now be into the third wave, this first initial advance of that primary subwave would also have a wave 1 coming down for a wave 2 moving up. So what I'm looking for is this main subwave of the primary fifth to form a 5-wave move for the third wave to come down and set the second wave bottom, breaking back to the upside so that I can enter a long position on this trade. I hope you understand what I'm saying here, because that's pretty confusing. So going back to the daily chart, just because I want to make sure that you understand this, if this is the wave 4 termination moving to the upside, this is going to be a 5-wave move to the upside. Now within this 5-wave subwave of the primary fifth, we're going to have 5-wave move up, a 3-wave move down, and a 5-wave move up, 3-wave move down, 5-wave move up. So within the third wave of this subwave, there's also going to be a 5-wave move to the upside. So what I'm looking for is this wave 2 termination to come down on that subwave of the subwave to make that termination point and start moving up for the third of the third so that I can enter my long position to try and catch this primary fifth move to the upside. And as I mentioned in a post yesterday that I placed on my YouTube channel, I was showing that we had a bullish hidden divergence right here on the daily, which is very slight because this candle basically just came down a little bit beyond the wave C, just sweeping it. But coming down here on the CCI indicator, you can see that the indicator is showing an upward move to where the price action was showing a downward move coming off of this point here, which tipped me off to the fact that we could potentially start to see the breakout moving up into the primary fifth. And it looks like so far that's what's happening. So that's another great sign. Now, as a trader, one thing that I have been learning recently that would seem to be a no-brainer is that in the process of trading, it is a never-ending process of learning. Just when you think you've got a handle on trading and you've got everything figured out, you learn something new. As trading seems to be such an incredibly dynamic thing, and I've been learning a lot about different applications of how I see the market as an individual, how the market functions, and the tools that I use to try and get the best possible read on the market. And just about every time I think I've got my grafting trading strategy nailed down, I learn something new about it that improves it and makes it even better. One thing that I have been doing recently that I used to do in the past, but I stopped using, was using the CCI instead of the stochastic or the RSI, because the CCI is based on the average price, and it also has a tendency to be more exaggerated than the stochastic or the RSI. Now, a lot of people who trade divergences look for confluence between the stochastic and the RSI, but when you use the CCI, you don't need to do that. You only have to use the CCI, because it makes divergences completely obvious when they occur. Even slight divergences like what we see here. Now, this is a tool that I used to use, but I stopped using in favor of the stochastic for quite some time, and I've recently replaced using the stochastic by going back to the CCI, and I'm glad that I did. I'd almost forgotten how incredible this tool was. It had been so long since I used it. Now, I've used smart money concepts, which is the fair value gaps that you see on my charts, including the order blocks, for quite some time, as they work as incredible indicators for support and resistance levels on the charts. As you can see, there's nice support here. There's been nice resistance with this one, coupled with the Elliott Wave to help me get an idea where I am at in the pattern. So if I can stay grounded in the pattern, I know where my support and resistance levels are. I know what the wave count is, and I use my weak dojis as potential targets or potential reversals. And since the price of XRP is currently trading above equilibrium, which is also a core fundamental of the grafting trading strategy, I have all of these things coupled together, because even with this recent crash that we've seen, price is still trading above the equilibrium zone, which is bullish. I have potential targets or potential reversal points here with the weak doji waterfalls on the daily. I know the support and resistance levels on the chart because of the bearish fair value gaps here and the bullish fair value gap at the bottom of the pattern here. I have the Elliott waves to keep me grounded in the pattern. I know that we are in an Elliott wave triangle pattern with an E wave completion, which means that we have the fifth wave remaining. I know where the wave 1 termination is. So if this wave count's going to be invalidated, this is likely where it's going to occur, is right here at the wave 1 termination. And by using the CCI, I've spotted a bullish hidden divergence right here on the chart at this very point where the E wave termination and the primary fourth wave termination are all in alignment with each other. So between this support zone, this bullish hidden divergence, the E wave termination, and the primary fourth wave termination, I have 4 points of confluence right here, which makes me very confident in what we can see moving forward. So I really like what I've been doing lately by using the smart money concepts, the grafting trading strategy, Elliott Wave, combined with the CCI to throw in divergence as well. It seems to be a very strong combination. And as always, I use the Gaussian channel on stock mostly because I like the color that it adds to the candles, as it gives me a much easier read on the price action than just red or green candles. And if you've followed my channel for very long, you understand that I use the Gaussian channel to give me certain measurements as well, simply by using the measuring tool. As this 50% line that runs right here in the middle of the Gaussian channel is more important than a lot of people realize. So I'm really liking this combination that I'm using now. And since I've been getting back into trading quite a bit lately, testing a lot of the trade setups and a lot of the trading theories that I've had for a long time, rather than paper trading them, I'm actually putting those to work, looking for these setups in the real live markets to put them to work to see what happens. And so far I'm having a lot of good luck, as I have spent so much time back-testing these trade setups. It's nice to finally get to the point to where I'm putting them to work. But that doesn't mean that all my trades have been winners. But moving to the point of actually trading live is really teaching me a lot about the last 9 months I've invested into doing all this research. It's also helped me to exclude a lot of things that just simply don't work, or don't work as well as I hoped they would. But if you're a chartist or a trader, you might want to try this combination, because you might find it as valuable as I do. By stepping up your ability to get multiple points of confluence, it really works to help you come to a much better conclusion. And once you get the confluence like we have here with 4 points of confluence, you can then use the Elliott waves to try and plan out your entry based on the Fibonacci levels. And it's been working out very well for me. So this is what I'll be keeping an eye on to see where we're at within this particular pattern. It's been interesting watching how this has unfolded throughout the last 2 or 3 weeks. But now that we've come down for the E-wave termination as well as the wave 4 termination completing the triangle, at this point, basically what we're watching for is the primary fifth to come to fruition, or to see the pattern invalidated by price moving below the wave 1 termination. As I often say, nothing in trading is 100%. Even though this pattern is incredible with the Dragon Pattern overlaid with the Elliott Wave Triangle, there's still no guarantee that this is going to break out to the upside as we're assuming it will at this point. All patterns have a failure rate. But the good thing about this particular pattern is we know where we're at within the pattern. We're grounded. So we can keep an eye on these subwave counts, and if there's any violations that raise any red flags, we know to be cautious. And if this wave 1 termination is taken out, then we know that this pattern has likely been invalidated completely. So I think we're looking very good within this pattern, and it's just a matter of watching this play out. So thank you so much for watching. I appreciate each and every single one of you. Good luck out there, and have a great day.